You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for a rockin' show. It's time to rock out with the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. So exciting, you can get it multiple different ways into your ear holes. Of course, you can always go the old school way. Subscribe via iTunes, either to this show independently or to the full network, a full dozen-plus programs, wherever you find this, iTunes, Stitcher, wherever you like to get it, including our mobile app. It's all there. You can keep running with that. Of course, wherever you're listening, make sure if you are listening that way, if you are so inclined, if you like what you're hearing, head on over there, leave a review, a comment, whatever you feel is appropriate over there. All that stuff helps with, search engine aggregation on those platforms, all that fun stuff. And of course, for you hardcores, we also make it available live. You don't feel like waiting for the old podcast to come out. I understand. I got you. We make it live then. Over there on Mixlr, M-I-X-L-R. Grab that link. If you follow us on social media, you've seen it there already. Grab it, set it, and forget it. Follow us in Mixlr, whatever you feel like doing, and you can be notified the second we go live. Not just this program, same link for Option Block on Thursday, for, of course, Vol Views and Twifo on Friday, as well as some midweek stuff we like to throw in there, as well a few surprises throughout the week. Never know what you're going to get. Follow us over there on Mixlr, and you too can have the fun. And of course, however you listen live after the fact, make sure you hit us up. Questions, comments, insights, all that goodness. We do actually enjoy, on occasion, hearing from you guys. All right, and joining me on the old program today, got the usual colorful cast of characters starting off. Let's go out to scenic, quiet, lovely St. Charles, where he just woke up from his long nap. Because it's time to do the show. Yes, it's time for Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to ye old show, sir.
Always good to be here, but I mean, I know the markets were a little bit slow today, but I didn't quite need to take a nap from them.
I know someone of your advanced age, sir, you need to, got to keep the system up and alert. So nice midday siesta. It works, keeps you in tune.
There you go.
All right, and also joining us from who knows where the heck he is. I guess we'll find out. He is the Greasy Meatball, Mr. Mark Sebastian from Carmen Line version 1, Carmen Line version 2, as well as Option Pit. Mr. Meatball, welcome back to the show, sir.
Good to be here. Great to be here. I'm coming to you from the Suburbia's utopian planned village, Riverside, Illinois.
Utopian
one of the 10 towns that changed Illinois.
That's not
changed
scary.
America.
That's not scary in Orwellian at all. A utopian planned village.
Oh, it's utopia here.
That guy who sent in that music for you keeps hitting me up to see if we're going to use it, so I'll have to work it into one of the shows one of these days, if for no other reason than just to make him happy, not you, of course. All right, with the team assembled, beaming in from utopian planned villages, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show where we break down the wild, the crazy, the reckless action that was lighting up the street today. And as Uncle Mike alluded to, not a heck of a lot really lighting it up today. Most of the major indices ever so slightly finishing up in the green. S&P almost literally unched. So, You can call it green because it's a plus, but it's a fractional plus, so it doesn't really count. The Dow, the Goldilocks of the day, up about 1/10%. The Qs just raging north, up a whole 0.2%. And surprisingly, all this green on the screen means VIX cash getting a little bit of weekend back. Still there at the end of the day, up right around 11.35 or so, finishing out the day there. So still north of the 11 handle, still rich. All of us on the show, I think, predicting a little bit less vol coming the end of the week. So we shall see how that plays out. Also, still got some earnings popping off this week, even though a lot of the big ones that you guys like to look at have reported out there. But still some names coming up, like tomorrow we got Dick's before the open, Home Depot for all of you out there active in the in this different retail sides of the space. I know, Mr. Meatball, you like that stuff. Cisco, Uncle Mike, cover your ears. Cisco after the bell on Wednesday. You're very lucky that it's not a show day that day, because I know that would be very painful for you. Before the open on Wednesday, we got Target. Before the open on Thursday, we got Walmart. And, of course, Best Buy. Best Buy actually interesting. The folks over there, I think it's at Earnings Whispers, do a bunch of interesting stuff with earnings. Usually they just put out charts. But they started recently tweeting out also some interesting stuff on, which I haven't seen before, maybe it's new for them, is the average move for some of these names versus what the options are pricing, obviously, with the straddle. And Best Buy on the list, they've moved about 13% of late. Again, that's an average. They don't say, I'll have to look and dig in. They don't say what that average is for, if it's for the past year, a couple of years, or if it's just for the last couple of quarters. But they say it's averaging about 13.1% move and pricing in about 10% right now. So there you go, if you buy into such things, and perhaps a wee bit underpriced given all the action out there in all things Best Buy. Dick's also looking maybe a little overpriced, averaging about 11.3%, pricing in 12.3%. So there you go. Harvest that rich percent out there in Dick's. But a lot of interesting stuff going on out there. Let's go in reverse order back to the home of Carmen Line, Funds 1, Fund 2, and Option Pit. Mr. Meatball, what was catching your eye today, sir?
Started out really negative, and we ended up on the day. They managed to bid VIX up on the close, which was a little strange, although VXMO was down. VIX futures pretty flat. I'm really kind of fascinating. After kind of last week, we got a little bit of a spook out of the market. I'm interested to see whether we get either some sort of tankage out of volatility, or whether today was a one-day reprieve, and we're heading for more carnage, if you want to call a week where we had a 1% down move intraday, but really ended up down on the week by like a couple of points. That, if you want that kind of carnage.
Yes, just blood everywhere, raging through the streets out here. Amazing carnage in today's market activity. Could nearly keep my eyes away from all the carnage on the old street today. Uncle Mike, were you also as engrossed by today's carnage, or were you able to avoid the bloodshed, sir?
I think I could handle it for a 2-point update on the S&P, but we did have some carnage last night, if you want to call a 10-point drop carnage in the S&P, and that most of the night we were relatively flat, but then around the time that Europe opened, we started coming down. I believe a lot of from what I could tell, it seemed like a lot of that was and President Trump talking with Vladimir Putin. Vladimir Putin says, I didn't have anything to do with your elections. Oh, okay, I believe him. And that was his tweet that came out. And then he talked about the other guys that they're investigating. I believe he called them political hacks. And that seemed to spook the market a little bit. But then the market decided to not care about that anymore once the buyers came in around the open of the U.S. markets, because pretty much from where we opened, we went straight up for the first hour. And then we still came up a little bit more throughout the day today, but it was sideways. But all of this straight-up movement, with which I refer, is just basically going back to where we started, or where we ended last week, to where all in all, at least for the first hour anyway, it was a very exciting road to nowhere in today's market, or I shouldn't say nowhere, I should say of a positive 2-point day on the day. A couple other things that I'm watching, I really nothing to report of any major or any significant movement. I'm just going across all the screens that I watch during the day and not seeing a lot of significance in any other areas. We did have almost a 1% move in SLV.
GE got smoked. That was interesting.
Got it. But yeah, really not a ton besides the GE smoking.
Yeah, that was GE took it on the chin. It's amazing. They told investors exactly what everyone was expecting, but I don't know who was holding out hope that like somehow their call was going to be magically great. But whomever that took that call then immediately went, "Oh no, it's as bad as they said," and sold everything. But I actually, I look at GE. There's an interesting kind of wheel candidate, a long-term hold. They're not going to go out of business. We still need freight. We still need energy.
Light bulbs.
We still need, well, I don't know about GE light bulbs, but we need light bulbs. So, it's just kind of interesting the way that lined up.
Speaking of the... I'm sorry, go ahead.
Yeah, and so that was what kind of surprised me was that got smoked that way.
Speaking of how things lined up, the big news of the day that I'm sure you guys are all keen to see in a day that was pretty quiet. One name was rocking to the upside. That is, of course, Amazon. Pretty much any day they're rocking. Today, we were just joking on the show about a week or so ago whether Uncle Mike lives in Hobbiton out there in good old St. Charles. Well, clearly Jeff Bezos was listening because he went out today and signed a massive deal to license The Lord of the Rings for a TV franchise. $250 million up front just for the license. Not even no people attached, no casting, no actual scripts, no stories, no nothing. Just to play in the Tolkien sandbox, talking $250 million. Obviously, they got the cash and they're willing to pay it. They've seen the money that Game of Thrones and Time Warner, those guys are making with all HBO, with all the Game of Thrones action. Clearly, they want a piece of it. Lord of the Rings, of course, the progenitor of the genre, so why wouldn't you want that? But still, just crazy deal. And obviously, usually have these big outlays. People get upset. They crushed stock. The stock was up nearly 2% intraday at one point today off this news. So people clearly liking this. And I guess, of course, in this looming age, everyone says content is king. You got Disney locking stuff down. Potentially was at the point of buying Fox. Going to lock down a lot of those rights, try to squeeze Netflix out of that market. Amazon locking up a lucrative franchise that they own whole hog. They can make their own toys off of it and all their spinoffs, and you have to go to Amazon to stream the show. I don't know. I guess that can make sense. It's the money up front's a lot, but if any license could make this back outside of like Star Wars and a few others, this is probably the one. I don't know. Uncle Mike, were all the Hobbits out there in St. Charles, were they all excited at the announcement for this news?
Oh, they were dancing in the streets out here for sure. We were thinking about shutting down the city and calling a citywide holiday for such an event.
Yes, lots of hobbitry. I don't know, Mr. Meatball, was Amazon slinging it in the pit chat today?
Not exactly, but that was exciting. I was just commenting that, hey, why don't they buy Mattel since they're at it? Since Mattel's on the block.
They can make all the toys right through Mattel. There you go.
Yeah, think about that. Amazon could corner the toy market, and they could sell toys at Whole Foods. They could take all their organic, recyclable Barbie dolls, and it could be grocery store Barbie. Every day Barbie comes in, a little bit more of her life squeezed out every day. She goes outside, smokes a cigarette on her break. Make sure to push reusable bags because we all know those little plastic bags are evil. It would be, instead of the Barbie dream car and the Barbie dream house, it would be the Barbie studio apartment over the hardware store, and it would be the Barbie dream 1998 Volkswagen Passat.
Yes. Keeping Barbie's expectations a little bit more manageable these days. But, Amazon's already slinging Echoes in Whole Foods, so it's not that big of a leap to sling whatever. Sling their little Hobbit action figures out there in the front of the store that they produce themselves, licensed off their own show. The synergy opportunities are just mouth-watering over there. Speaking of a synergy, there really was a decent amount of it in the options world over the past month. We've been a little busy on the show with special guests and everything. Didn't have a chance last week to really break down the numbers from October, but it was actually a pretty good month. If you guys pay attention, you saw October was actually kind of rocking and rolling. October usually a bit of a crazy month anyway. This year, no exception. The numbers from our friends over there at OCC, the Options Clearing Corp, saying October overall for them was a banner month. 20% jump from October of 2016. That's across the board. They kind of put a lot of stuff into that number, including stock loan and other things. So we'll pare it down a little bit. Obviously, exchange listed options, that's kind of what we're coming to the table for. That volume hitting 371 million contracts in October. That's a 20% jump, like we said, from October last year. Year to date, ADV for the year up 3% from 2016. It's about 16.5 million contracts right now. So everyone who's doing a lot of hand wringing, particularly just a few months back in May at the big options industry conference, there was a lot of people talking about just where is the volume going to come from? Oh, things are so dire, the sky is falling. So far, at least this year, holding up to be an up year, which is kind of good. Equity options volume, drilling down the rabbit hole a little more, 326 million contracts. That's a 17% increase from this time last year. Getting a little bit farther down to ETF options volume, about 126 million contracts. That's up 5% from October of last year. Getting a little further down to index options, up nearly 50%, 46% from this time last year. So that's probably a little bit of a combo of last year maybe not lighting it up as much as you'd expect, and this year clearly lighting it up as we saw a lot of things popping off in October. So 50% increase for index options. That's big no matter how you slice it. Also futures, they clear futures there too. It's worth noting because pretty much the only futures they really clear are VIX. And that volume was up 18% from October of last year, and year-to-date futures volume for that up 38% ADV, I should say. So good numbers out there. I don't know, Mr. Meatball, is this kind of stuff surprising you, given the fact that at the beginning of the year, and even not that long ago back in Arizona at the big conference in May, people were really a little bit pessimistic on the outlook for the year, and at least so far here through October, things are actually up on the year. Yeah,
they were definitely getting a little scared there, right? And it seems that they're doing a little better now. So that's good. I'm very pleased that things have picked up, and that makes sense. There is a lot of there's a lot of reasons to go long. The FANG stocks and buy them. I'm interested. How much of the increase is all just FANG stocks, which are now too expensive to just go out and buy?
Yeah, I think if you took, that's what we were saying before about, these volume or weighted funds for S&P versus, or just the weighted funds, the equal weight, I should say, versus, the traditional FANGs that make up 80%, 90% of the S&P. I think a lot of that same argument could be made for that. Speaking of names, asking you guys right now, if you're listening live, head on over to Twitter. There's still some names in the retail space popping off this time. I think it's like the first poll is missing one. But we're going to ask you guys right now, head on over to Ad Options. What are you going to trade this week from an options perspective? There's still some big names in the retail space popping off that I know you guys like to watch. We're going to give you the choices of Best Buy, Walmart, the old perennial favorite, Dick's. Seems like you can't have a freestanding strip mall in America these days without either a Mattress Firm or a Dick's in it. So clearly they're doing something right. And then, of course, good old Target popping off there as well. So vote over there if you haven't. It's going to be a little flash poll. Not going to be for the whole week. It's going to be for the duration of the show. So we'll see what you guys are trading. Meanwhile, we'll see what the market was trading because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the funkalicious portion of the show where we break down all the weird, wild, wonderful, whimsical, just downright crazy paper that was lighting it up today. Got to kick it off, as always, with the craziest paper we see every day, which is a continued life of these crazy cakes. Tesla puts, looks like maybe a spread going up today. The Jan 2019 50 puts in Tesla, lighting it up to the tune of nearly 300 contracts, 275 today. Also worth noting, 262 of the par is going up, the Jan 2019 100 puts. So it seems like there are starting to be some spread action, some ratios maybe going up between those strikes. About 33,000 and change open of the 50s, 18th. The pars are leaping up there. They were just 15,000 a week or two ago. So nearly 19,000 open on the par puts. So people starting to warm up yet again to those strikes. Worth noting too, also got all the way out to Jan 2020, it isn't as fun. As far down as they go are just the 175 puts. Worth noting, they had 34, I should say, hitting the tape today on an open interest of 0. So they're starting to pile in all the way out there. But 175, nowhere near as fun as the 50 puts. That said, Mr. Meatball, you can admit it to us. You know, we lured you to the dark side with those VXX 10 puts. You can admit to us that you're the one out there buying these things now, right, for Carmen Line? That's what the new fund's all about?
That's been me the entire time. Are you kidding me? Yeah, you know, I think that you got somebody. My guess is this is credit related. Like Alex said, I think this is either credit related or structured product related. I don't see a reason for trading these other than the fact that this owner has some sort of terrible risk if Tesla goes out of business, which, given the beauty of the Model 3 production, I think that's going to be impossible. But so, Mark, here's my question for you on Tesla. What is going to be the most ridiculous promise that Elon Musk makes on Thursday's semi-truck announcement? That the truck bed will be floating, that they're going to manufacture 1 million of them next year, that they're going to instead of exhaust, it'll actually have release brownie, the smell that brownies make when they're baking, or that it will be able to transport to and from the planet Mars. Maybe that should be our poll question.
That should be another poll question. Once we get our things sorted out with our retail one, we'll post that one next. I don't think it's up there anymore. I think they forgot Target and they got to put it back in. So we'll repost it if you voted. I guess some people have already voted, so maybe we'll just keep it up. That said, he's already said so many crazy things. They said crazy things like they would never float debt, and they did, which put people in line, all the stockholders out there. So enjoy that one. But yeah, I expect some outlandish stuff. I expect him to say something like, we're going to put the trucking industry out of business by 2020. Speaking of which, interesting enough, I'm not that familiar with the trucking logistics business. I was talking to someone this weekend who spent their life in that business. They told me that it's the single largest employer in the nation, the trucking business, all just truck drivers and everything else like that, if you break it down by industry, which doesn't bode well for the future of employment in this country when we have everything and their mother pointing towards AI of these big rigs in the next 10 to 15 to 20 years. How's that going to weigh on our economy there, Mr. Meatball?
Yeah, that's interesting. I think it's 45 out of 50 states. It's the number one. But then you read an article about some trucker that was like, high on whippets for 17 hours, when he got pulled over, some ridiculous thing. So there's pluses and minuses. I think that the trucking industry is due, shall I say, to be disrupted. But, you're still going to need people in the trucking industry to unload the bed, to load the bed. What's to stop somebody from getting in front of one of these semis and stopping it when it has cargo? I'm going to go out on a limb and say that there's going to be some sort of, or what if it breaks down, or my guess is that even these self-driving trucks will have seating, and there will probably be somebody who's making a little less. There will be somebody in that seat for the next 50 to 100 years, because there's just, you're going to need somebody to deal with that piece of the delivery.
Yeah, that guy I was talking to was a logistics guy this weekend. He said, doesn't see it happening anytime soon. Just the legal issue. The technology is almost there, but every municipality has their own rules on this stuff, and getting that all sorted out for a massive cross-country trip. Going to take a while, probably longer than the Musks and company will have you believe after their event coming up this week. So we'll stay tuned for that. But of course, if there's an area that's ripe for some automation, these long-haul trucks probably are the place to do it. Speaking of long-haul, someone out here in SeaWorld's playing for the long haul, or perhaps not what you'd be looking for. We haven't talked. I'm trying to think. I don't think we've profiled SeaWorld, so maybe a newcomer here to the iBlock. If we have talked about them, it's been quite a while, so it's new to us. SeaWorld's Entertainment, of course, ticker symbol SEAS, SCAS, day of the Shamu infamy and Blackfish and all the other fun stuff. Not a lot of good press for SeaWorld the past couple of years. They closed today $11.55, taking it on the chin off another 5%. So the market not liking what they were seeing out there in good old SeaWorld today. I don't know exactly what drove them to the dark side. I'll have to look. They were trading this a week ago about a buck and change higher. So hasn't been a good cycle. They kind of rallied post earnings. They were trading 10 and change. Got all the way up to nearly 13 and then pretty much coming right back down the other side of it now. So interesting little blip here for good old SeaWorld. It's the name that does actually decent amount of options paper, nearly 10,000 contracts a day. So almost 3 to 4x, or if not, 30x what some of our traditional odd block names do. Today doing about 168,000 contracts, 32 to 1 puts over calls. Of that 168,000, about nearly 160,000 coming in this one mega massive put roll. If you scroll your tickers, your screens, your chains all the way down to Jan 2019 listeners, you'll see exactly what the heck I'm talking about. There's one strike that kind of just leaps off the page. 79,000 of these Jan 2019 20 puts are open. These, I guess I said 20, so these are fairly in the money. Nearly $9 in the money for these puts right now. Nearly 80,000 open on that strike. Today, someone traded nearly 80,000 of them, about 79,000 going up today, including mega blocks of 40,000 each. Paper coming in, trading the 20 puts in Jan for $8.40. Doing those mid-market, and then coming around, I guess you can say a mid-mark on the latter kind too. For the 20 puts, doing it for $8.50. So a nice dime on the old roll, which could have been one of the reasons why perhaps they were doing this. Because initially you'd assume this is long-term hedging paper, but it does look like with some of the execution, maybe this is these are short puts and they don't want to take the stock. They want to roll these bad boys. Either way, if they're short, that's an interesting play to continue, let alone continuing on that same strike. My first guess, it's going to be long puts. That's usually what you see here, but still interesting. Worth noting, like I said, no open interest at all in the 20 puts, so 2020. The 20 strike puts in 2020. Say that 5 times fast. So clearly opening there. It has all the hallmarks of a roll. Whichever way this guy is looking, dark side or light side, it clearly seems like he wants the party to continue for another year. If he's short, he wants that retracement. He's hoping for it. This has turned into a long-term position. If he's long, then it's kind of more interesting because these puts have worked out for him. Maybe he needs to take some off the table rather than going back to the same deep in the money strike. Either way, this one's kind of weird, Mr. Meatball. The timing's weird. He's still got some time on these puts, but maybe he wants to take advantage of a little bit of a gamma explosion on these puts in the front month to sell them and get a little bit better price than the longer term ones. Obviously, a lot of things going off here. Let's look back at the chart. We mentioned the last week or two. Let's look back at a year here in SeaWorld. This thing kicked off the year at a much higher level, nearly $17. Traded as high throughout the year as about, a little over 20. Broke the 20 handle back in late February. And then kind of vacillated around there for a while. And it's kind of been drifting downward ever since early summer. Kind of has been on a long downward trajectory. So I can see how this guy may have gotten into these puts at a much farther out time horizon. Let's see really quickly if I could look here. They've been open at least, my chart goes back here to early September, and these puts were open back then. So clearly at least 2 months, longer than 2 months, these puts have been on. Mr. Meatball, a couple of things to unpack here. Weird strike selection, the 20 strikes, so they're deep in the money no matter which way you're looking, if you're rolling a long put or rolling a short put. Timing is kind of funky as well. Why are you taking off Jan right now? Of course, he had a big sell-off, so that could probably have something to do with it. As well as just, the interesting outlook here. What's your take? Which way do you think they're leaning on this? And then what are your any thoughts on the timing and the size and the strikes and everything else?
Yeah, you might say this is a whale of a trade.
How long have you been working on that one while I was talking?
I've been holding it the entire time you started talking. At the moment you said SeaWorld, I said whale of a trade, whale of a trade, whale of a trade. Don't forget whale of a trade. This appears to be it's an interesting roll. I'm wondering whether it's somebody who sold puts that has been trying not to have a realized P&L or something crazy like that.
I kind of got that feeling again after I started digging into it more.
This is like
it seems like a rolling a short put. Super trader. Yes, that's exactly. I don't want to take.
Oh yeah, no. We can take a fee.
I don't want to take the hit on 80,000
on that.
If I just roll them for a year, I just do it all for a dime, and it makes the bad guys go away.
Yeah, no. So it's not a realized loss because the position's still open. It is fascinating, and it looks like there's some combos that went up too, which are kind of interesting. So it might have had some weird little stock tie or something. All I know is that this is an odd one, and I think it's got to be that. The only explanation is that someone does not want to admit the defeat.
Yeah, that's the only reason I can think why you'd keep that 20 strike again. Is you got to keep the same thing on and just hope it works for you this time. Because if you're long those puts, you're not buying the 20 puts. Why? Why are you buying an $8 in the money put? You could do so much better. You've already had it work out for you. You already got your hedge. You don't need it again. So yeah, there's a lot of weirdness there. That's why I kind of lean. Even though first blush you look long, a little bit more analysis, it does have the feel of someone on the dark side just doesn't want to concede to reality. See, listeners, it's not just you and your 10 lots that won't close out the shorts. It's our friend here who will potentially roll for another year and do it all for a dime just to not admit defeat on the dark side. Yeah, that's a fast. Let us know your thoughts on that. You think that's what it is? I kind of got a feeling I think that's what it is. But see, that's why we like to profile these. Because the size money, certainly not always the smart money. In this case, these nearly $9 to the bad on these. So clearly, from just about every level, we're pretty wrong. And he refuses to admit it. I'm surprised the risk manager didn't tap him on the shoulder and be like, oh, I bet you he saw these puts selling off. He saw these near-term puts popping. He's like, I can do it for a dime. I got to do it now. And so he rolled 80,000 of them. I like to be a fly on the wall in that conversation. Instead, we shall move on to another name out here. We talked about a few times of late. This is good old Square Inc. They are the payments company. They make that little kind of literally square thing you plug into your iPad or your iPhone or your tablet of choice, and you can handle, credit card transactions. Pretty interesting basic stuff. They do about 20,000 contracts a day. This name closing today at about $40, up about 77 cents, or right about 2%. Ticker symbol SQ Square. They did today, so they average about 20,000, doing about 5x that, doing nearly 100,000 contracts today. About 3-to-1 puts over calls, including one mega print here in the D's 35 puts, going up 40,000 times today on splits, doing 24,000 over there in Philly land for 45 cents, 16,000 for 40 cents. So again, doing a little bit of a split down to get those split prices like they like, somewhere around 42, 43 cents. On the Philly, worth noting, I think we have a listener question about Philly a little bit later, so worth noting where this one went up here. Open interest is negligible, so this is all an opening print. Worth noting as well that these kind of went in, close to the bid, but not quite on it. So it looks like it potentially has an opening put sale flavor to these bad boys. If that is the case, then these prices they're liking. If they didn't do stock, they're liking it so far because these puts went out 25 cents at 35. So they got a nice little squeeze here to the downside. Worth noting, it was a pretty active day out here for Square. Only 40,000 going up in these puts, so clearly some other action lighting it up throughout the rest of the months out here in Square. Speaking of looking, looks like 10,000 of the 32 calls going up today as well. So all sorts of, in March, all sorts of funky paper lighting it up today in Square. Speaking of which, let's see what's been lighting it up over the past year. This name's had a good run ever since pretty much a year ago, around election time. It was trading, about $12 and change. What a year difference a year makes. This thing's trading $40 now. So Square really just loving the new administration. Just riding this bad boy all the way up. Again, $40 here. Interesting stuff. Mr. Meatball, what say you? You think these are clearly opening? You think they're shorting these puts, or you think they're got something else going on here? And what's your take here on Square? Is this the name that pops up in the old pit chat at all?
I love Square. This is a great name, and I think it may be a put sale. This is one of those that is really done well the last year or two as mobile payments have been huge. I'll tell you how I got interested in this. I went to the doctor's office and they pulled out a Square. And I was like, really? You're just using this thing attached to your phone? And they were like, yeah, we love it. And so I think that they've got a lot, their payment processing. Don't be surprised if they get picked off, because if I'm Visa or MasterCard or American Express, this is a name that I would really want to go after.
Yeah, it could be part of what their run-up's been about. Maybe they've been there's been some rumors floating around about them being in play. And you're right, it's a pretty simple play, but it works. And if you're a small merchant like a doctor, why do you need to deal with all the hassles of all these other play? Just slap it on your phone, swipe it, and forget it. And I think the rates are fairly standard, so you're not really losing anything there. And it's a good little trade. So, yeah, interesting stuff. Looks like someone opening up some aggressive downside here, 35 puts. So if this thing retraces to where it was about a year ago, these puts could be aggressively in the money, shall we say. You could be looking at a scenario like our friend there in SeaWorld, where he's refusing to admit reality. He's only $9 to the bad. These could be a lot more in his face if it does indeed come to pass. Well, speaking of things that are funky and perhaps in your face, we're going to wrap up the odd block today with a review of some paper we talked about almost exactly 2 months ago, back in August 17th. It was a funky, looked like a puts and strangle combo in PSEC. This was Prospect Capital Corporation. There, as the name implies, a financial services company. Go figure. Ticker symbol PSEC, PSEC. At the time, we highlighted, looks like it was the Jan 7-8 strangle being done on a ratio. It looked like paper sold the whole thing. Sold 10,000 of the 8 calls for 7 cents, 5,000 of the 7 puts for 42 cents. And then also, for a kicker, I suppose, added a little bit of a time component, added also 5,000 of the no 7 puts. So it was a bit of a time ratio strangle, weird one. Sold those for 21 cents out there. And it looks like obviously the stock was obviously higher at the time we were doing this. We were talking about the stock back, on August 17th. So let's just pull that up. On the 17th, it was about nearly $8, $7.79. Fast forward to today, stock a little bit lower than that, to the tune of $6 now, $6.01 to be precise. That was trading in a 5 handle earlier today. So these, shall we say, the downside of this strangle is not looking too good here for our friend. Like I say, sold the Nove 7 puts for 21 cents. They are now trading 90 cents at $1. These things are obviously about $1 in the money. So that angle, that leg not looking too good. Not surprising, like our friend in SeaWorld, he has yet to close these out. So perhaps unwilling to take a little bit of a loss there as well. Looking out to the Jan 7 puts, obviously, those not looking too good as well. Those are trading. He sold them for 42 cents. They're trading 95 cents at $1.20. So also in his face there as well. And then last but not least, surprise, surprise, these, it looks like he did close out. The Jan 8 calls that he sold for 7 cents. He did close out those 10,000 times because there's only about 3,000 contracts left open on that strike. So surprise, surprise, Mr. Meatball. He sells the calls. They go his way. He closes them out. The puts, not so much. I'm detecting a trend here. Are you as well?
Yeah, people don't like closing losing trades or trades that aren't so hot. I don't understand it. So
Go figure.
It's crazy. It's like, well, maybe these people manage money, and I'm just kidding. I don't know how many times we can abuse that Karen the Super. At this point, I feel like we've ripped on Karen the Super Trader so much that, she almost has already done her penance. So, I think that this is another one of those cases where people don't like to admit defeat.
Yeah, it's not just you. That's why you like highlighting some of these. People think because you have a size AUM that you're immune to these, human peccadillos of normal trading and psychological quirks and all the other fun stuff. Yep, it happens to everybody. People don't want to close out the things that go against them. But they'll close out the 7 calls for 3 cents or whatever the hell he closed it out. Hey, look, that won for me. That makes it up for the 50-odd cents to $1 he's losing on the other ones. So interesting stuff. Speaking of interesting, it's time for you guys to take the reins. It's Monday. It means it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, you know the drill. It's Monday. It's time for the mail block, the portion where you guys take the reins, questions, comments, your answers to our questions, all sorts of fun stuff. You know how to send them in, so let's get the ball rolling. Last week, we asked you guys, hey, we tend to counsel against trading options through the earnings event itself, but we still know a lot of you like to do it. If you're going to go that way, how do you like to proceed? Do you like to buy calls or call spreads, buy puts or put spreads, sell puts or put spreads, or the old spreads with wings, flies, iron condor, etc., so on and so forth? Long or short, we didn't discriminate. You only got 4 spaces in the end of the day. And I thought that might be stacking the deck a little bit, and that did win. 38% of you saying the spreads with wings, taking a little bit more risk-mitigated approach, so we like that. Hats off to you. 29% coming in number 2 for selling the puts, going to the dark side. 27% number 3 saying buying calls. Only 6% want to buy puts. People just don't. I think it's a psychological thing. People just don't want to have a directional bet to the downside on earning. I don't know what it is. It's just weird. But c'est la vie. That's the way people work. This week, we asked you because, just the hottest thing. Well, by the way, that flash poll is up. If you haven't played already, head on over to @options. Do so quickly because it's going to expire pretty much by the end of the episode. We asked you guys, which earnings name popping off this week in the retail space do you feel like playing? Best Buy, Walmart, Dick's, or Target? Mr. Uncle Mike, we'll start with you. What do you think? I won't make you guess. I'll just say, what do you think our audience is guessing?
I think they're going to go with Dick's. That is my prediction on it. There's a lot going on there, it seems.
Yeah, Dick's has been an active one. They've been in our odd block a few times this year, so certainly not a bad choice. Mr. Meatball, what are you thinking?
Here, I will give everybody a piece of advice. Do not, don't go to Dicks.com thinking you're going to Dick's Sporting Goods, because that is not Dick's Sporting Goods, folks. Needless to say, I did not find the lacrosse gear I was looking for.
So you're voting against Dick's. I'm going to put you down in the Walmart camp. Why not? How about that?
I'll go Walmart.
All right, Walmart. Why not? Actually, I gave you good fortune because Walmart is winning our poll 56%, 33%, about a third for Target, 11% for Best Buy. Zero love, Uncle Mike. Zero love for your Dick. So there you go. Maybe they had the same experience Mr. Meatball did on the website, and they just don't want to vote for it in our poll. That's going to be up for a little bit longer. Unfortunately, you on-demand folks, you podcast folks, are going to be out of luck on that one. You're not out of luck on this one, though. This is our act. That was just a fun little silly poll we threw out there. This is our actual question of the week. If you guys have been following any of our stuff, any of our shows, any of our social media for the past month or two, you notice people are just deluging us with questions about Bitcoin, all things Bitcoin. The problem is, there's not a lot for us to really talk about yet because there's no listed products of the type we like to talk about. A nice exchange listed option contract you can sink your teeth into, hit a bid, lift an offer, all that fun stuff. Not really out there yet in the Bitcoin space. But you know what? That space is heating up. Everyone's pushing and shoving and fighting to see who can list the first Bitcoin derivative out there. So we thought we'd ask you guys, with this fray heating up, you got CME, you got CBOE both jumping into the space, hopefully before the end of the year, if not early next year. How do you guys think you'll be slinging some Bitcoin this time next year, sometime in 2018? Are you going to go with the CME futures on their Bitcoin reference rate, which is an index they disseminate based on an aggregate of different venues and their closing prices in London, et cetera, and so on and so forth? Head on over to their website if you want to see the nuances of it. Or you want to go the CBOE futures, which are based off the Gemini product, which has their own proprietary index they're calculating. I'm not sure exactly what the methodology is there. Again, you can go to the website and check it out for yourself. You think you're going to stick with the regular old, and regular in air quotes, because what's really regular about Bitcoin? But that said, stick with the old regular Bitcoin because you want to see how these new futures perform in the marketplace? Or are you in the, I just get off my lawn, I don't trust this crypto mode? Let's go back around the horn again. Let's start with Uncle Mike. If you have a vote, feel free to chime in. And more importantly, what do you think our audience is voting for?
For me, get off my lawn. For the audience, since we have mostly equity option traders in here, I will bet that they are going with the CBOE product.
Not a bad bet. You gotta dance with the one that brung you, right? And that's certain argument to that for CBOE futures. Mr. Meatball, you got a dog in this fight, sir?
I don't, but I'll tell you, I think the CME product, CME product got a lot more press than the CBOE product. When they launched.
Certainly did. That was kind of weird. I thought the same thing.
I mean, it got way more. And then CBOE announced the future, nothing happened. CME announces the future, Bitcoin rallies and gives up $2,000. So I'm going to just go out on a limb and say it's CME. And part of that might be that, these FX guys, these crypto guys, a lot of these crypto guys are just foreign exchange transplants. And the only place where you can kind of do FX options and where FX actually has a decent amount of volume on a listed front is on CME.
Yeah, certainly from a regulated, a trustable, reputable venue. We're talking about hitting bids and lifting offers before. And you're right, it was kind of weird. CME kind of dropped that announcement kind of out of left field. A lot of people have been talking to people at CME for some time about this, saying, hey, why are you letting CBOE can get out ahead of you, and then they kind of came out of left field and said, yeah, we're doing it too. And that one certainly got, you're right, a lot more attention for whatever reason. I didn't understand that. They seem to be very comparable products, but again, I'm not as familiar with the nuances of the Gemini index. I'll have to go dig around a little bit and see how that stacks up versus the Bitcoin reference rate. Either way, a lot of you the majority of you, again, this just went live before the show, so you got all week to vote if you haven't already. In this early voting, this first hour or so, 45% of you are in the grumpy Uncle Mike camp saying, get off my lawn, I don't trust this crypto. Tie for second with those of you want to stick with the quote-unquote regular venues. You're happier slinging Mount Gox than you are on CME, I guess, versus also the CME Bitcoin reference rate futures, both tying at number 2. Yeah, and I guess if our poll reflects the audience here, 11%, only 11%, coming in for the CBOE Gemini product. So again, we got all week. These numbers are going to change, but surprising stuff here going up here in these things here. All right, moving on. What you guys are chiming in? We were talking about those puts here in Square, the D35 puts. Who's this? All the way. Square for life is his handle. I guess he likes Square. He's chiming in, listening, saying they're already getting crushed on those puts. They could be, but we thought he was selling those, in which case they're looking all right. If he was buying them, you're right. He's already 10 cents to the downside, so perhaps not too happy. But it looks like I think we came out that he was selling those puts, so he's probably got a bit of a smile on his face. Speaking of a smile, a lot of NVIDIA traders have been smiling and laughing all the way to the bank for the better part of this year. Not so much today. And NVIDIA taking it on the chin, 212.63, off $3.50 or about 1.6%. The Nixter 1001. I like that handle. He's writing in saying, hey, I'm new to options trading, and let's see. I'm new to options trading, and I have been following you for 3 weeks now. There you go. So he's a new convert. Welcome, Mr. Nixter. Thanks for all your insights. I am still holding NVIDIA calls for the end of this week. No any update on NVIDIA. Well, pulling it up right now, it ain't looking too good, Mr. Nixter, I'm sad to say. Like I said, selling off. Let's pull up the chart here for the last, well, it's kind of had a nice bounce off earnings. We profiled them last week on the earnings. They were pricing in a lot of juice. It closed at 205 on earnings, opened up the next day, 213, so $8.50. I think they were pricing, if I recall correctly, about $16. So they were pricing in about a 2x move compared to what they got. So long premium-wise, it wasn't good. But if I don't know, you don't say where you got in. So if you got in right before earnings, maybe you overpaid a little bit. But if you didn't, if you got in a little bit of time ahead of time, then you might still be doing all right. Looks like the vol crush hasn't been super as terrible out here because you got this sell-off here afterwards, keeping things juicy a little bit, but still upside calls. Yeah, you don't say which strike or what anything else you got going on, but it seems like if you didn't take your opportunity to get the heck out of Dodge post-earnings, today's sell-off certainly ain't helping that. I don't know, Mr. Meatball, I know a lot of your hardcores in the pitch chat. I know Andrew's always talking about NVIDIA. Are any of you guys slinging NVIDIA, and what are they thinking here about this recent sell-off? They getting the hell out of Dodge, or are they keeping the love alive?
We did look at NVIDIA today, and that chart is just way too pretty and way too linear, and it looks like it wants to take a little breather. We love NVIDIA, but we also think that it's going to pull back. As I look at NVIDIA, the vol is still a little high. I like the price lower. To me, this looks a lot more interesting as some sort of put spread, puts to get in. Something along those lines as opposed to out of the money calls, because even with earnings coming off, the implied volatility is not particularly cheap in this name, and it does look particularly popular right now. There's a lot of people loving it, so I'm not a big proponent of calls. It's still moving around, but I think that it's set up for a put sale. But the chips are really hot. Everyone loves chips right now.
Yeah, NVIDIA's been printing money over the better part of the last couple of years. If you just got in the last little bit of a last blush here and it's selling off, I feel for you. We're never big fans here in general, just naked, outright buying straight up calls by themselves, unless you got a really big axe to grind in the name. I think we're always going to advocate some sort of spread or something else to just mitigate some of that outlay and doing something else against it. Doing stuff rather than just naked buying the calls. Because if that happens, this could sometimes happen to you if you get in before earnings. Even if the underlying goes your way, as it did, if it's not enough to make up for that vol crush, you could still be hurting and kind of underperform from a vol perspective. So you could be worrying that one as well. I don't know, Uncle Mikey, is this in any of your strategic nights or any of that fun stuff? You got any thoughts on NVIDIA calls?
No, it's not. And I agree with you in terms of buying the calls. One thing the vice president would always say would be along the lines of you can be right on direction and wrong on volatility and still lose money oftentimes. And especially when you're buying calls, if the underlying goes your way, a lot of times the vol will come out of it because of the inverse relationship. So I'm typically a fan of just doing the call spread if possible. And I'll miss out on the 40% move, but I'd rather hit more singles, quite frankly, than try and go for the 600-foot home run all the time.
That is the name of the game, often in the options place, hitting a few singles and doubles. Nice triple every now and then. You swing for the fences every time, you're gonna have a pretty high KO rate, unfortunately. As long as you got cash, I guess it's all right, but you don't want to burn through it that quickly. That said, burning through some cash, Mr. Meatball, I know you got some trade burning up your brain here. What was catching your eye today you want to discuss here?
Yeah, when you brought up chips, it reminded me of a really interesting trade I saw today in Micron Technology. And Micron's another one that's been really hot. It's been rallying, and it is well-loved across the street, kind of across everywhere. And this trade was tied to stock, and it was done as a call stupid. The trader bought the December 44 calls to open and the December 45 calls to open, 45,000 of each, and it apparently tied up to stock based on how the thing priced out. And so as I look at it, they were both kind of in-the-money calls with stock. Why do a delta-neutral trade with stock on in-the-money stuff? And the answer is that this is a guy that is – maybe thinking that, things could keep going, but so he sets his strikes in the money. And then if things keep going, because he's running away from his in the money calls, he will not experience some of the volatility drop that he may be worried about with these long calls. And if it drops, then the subsequent spike in implied volatility will be really valuable to the trader and put him in a position to win. In addition, I think it might be a little bit of stock replacement in that the trader is swapping out some options for some stock that probably won. And, when I saw this, I saw that go up, and then I saw volatility immediately begin to rally. People often ask me, Mark, how can you tell the difference between a trade that's going to move volatility and some weird trade that is just doesn't really matter. When you see 90,000 contracts all on the buy side go up in a print, in what amounts to the offer tied up, and both trades are bigger than the open interest, in a hot name, that is a recipe for a name that's likely to continue to move, and that was really what I saw that made me want to own options around it. We saw after the fact that the stock kept going and going and going and going, and rallied another 50 cents from there. And I would not be shocked if this thing doesn't just get a full head of steam here, and or make a very quick move the other way. This trader is positioning himself for some type of outlier move relative to what's currently priced in to Micron between now and December options. So, kind of a weird one, but this is a big name. It's a popular name. It's a thick name. And so one thing that Mark and I are talking about doing is adding in some, one big trade on some of the really active names, and Micron is certainly that. With how much it does. I mean, the average daily volume is 180,000 contracts, and the open interest is currently about 2.6 million. So this is a heavily traded name, and even amongst that heavily traded name, one trader did 94,000 contracts. So pretty fascinating stuff.
You just brought this up because you wanted to reinvigorate our debate about the stupid. That's why you did it, right?
Yes, exactly.
That's what I was thinking from the get-go.
I could hear Uncle Mike just chomping at the bit there. But this one, this is a stupid, but this is kind of a not that egregious of a stupid. It's only a handle, so you're not talking, I could see maybe you couldn't get the OI or the size you need on one strike, so you do a handle or plus or minus in one direction. That's a light stupid. I won't hold that against you. I think there's a lot more at play there than just that. When you see these size vast stupids for other reasons, that's an argument for another day. We won't kick that off again today. But still, interesting stuff. Yeah, we're going to do a little more of this. Let us know if you like this idea, listeners, of kind of just, we do this in iBlock already, obviously, but maybe getting a little bit even more in depth in some of these weirder, funkier, sizier, make up a term, trades out there in the world of options. Speaking of the world of options, time to give you our thoughts for the future. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, like I mentioned, there are some names popping off this week, including Walmart, Best Buy, Dick's Sporting Goods, and Target. And of those, Walmart running away with your options trading love. 55% of you say you want to sling some Walmart this week. 27% say no. I turn my nose up at Walmart. I shall instead go to Target. Only 18% for Best Buy. Zero. No love for Dick's. So if you're listening live, throw a vote in for Dick's. Give them a little bit of love. That expires in about 20 minutes. So get clicking quickly. Meanwhile, it is an interesting week. Like we said, there are still some names popping off this week, including, cover your ears, Uncle Mike, Cisco. Yes, coming off after the bell on Wednesday. We got some other names, like I mentioned, heavily retail this week. So if that's your bag, you're a happy camper. Uncle Mike, aside from that aforementioned name that shall not be named, anything else on your radar this week, sir?
Cisco Kid was not a friend of mine. A couple things. Oil and financials. With oil kind of pulling back like it has, and by pulling back, I mean not a lot over the last few days. It was kind of looked like it was rushing up towards 60. Watching the price action on crude for sure. The other thing is the financials. Financials have kind of come down a little bit over the last week as well. And the fact that we've had oil come down and the financials come down, and we've still rallied, kind of makes me wonder if we do have buyers coming in those two areas, be it the energy stocks, obviously, as well as the financial stocks. Is that going to rally this market to the next big number in the S&P, which is 2,600. So price action on those two areas. Also continuing to watch Disney. They had the earnings last week. We got to hear the Viceroy and his trade on Disney live on the show last week, which is exciting. Seeing if they can continue to move upward from their earnings announcement. I have a minimal position in it, if anything, or not if anything, a very, very, very minimal position in it. But still watching that as kind of like a bellwether type of a stock. So that is what is on my radar as of now for the rest of the week.
Hopefully the Viceroy got all he could at 90 in the after hours, because it's about 15 points to the good now. I'm guessing he didn't get much. I think he got a little bit higher and he got in the mid-90s. Still, you get some funky fills in the after hours, and that's good lesson to keep for the options as well. If we trade them, going to be some funky fills. Sometimes they work out pretty well, like this case for the Viceroy. Sometimes not so much. Mr. Meatball, take it home, sir. What are you watching the rest of this week?
I'm just today was a little funny one. VIX was down all day and then kind of rallied on the close. I'm really watching tomorrow. If we get a kind of a bid in the market tomorrow, this week could go extremely vola crushy. If we don't, if we have some more ugliness overnight, like Mike was talking, then maybe we have another week of the kind of listlessness, the Randall listlessness that we had at last week and today.
Randall List getting invoked on the old show. That means, of course, we'll have to invite him on the program. So you have invoked him, so it's your fault, sir. All right, I'm just kidding. All right, with the team assembled, we got to wrap it up. Unfortunately, that music means we're done. But before we go, one last time around the horn, let's go back to where we came. Let's start with the Meatball. Mr. Meatball, what's cooking in the land of Carmen Line 1 and 2 and the Option Pit and just the town of Riverside.
Oh, well, Riverside's gorgeous, but Option Pit, go on our blog. You can sign up for our VIX Made Easy webinar on Thursday at 8 Eastern, presented by me and Andrew. That's right, you get both of us. Go to optionpit.com/blog, and the registration link's right there.
And Mr. Uncle Mike, if I were wanting to visit the sleepy hamlet of St. Charles, or perhaps sling a little bit of vol skew, or I said to myself, I'm tired of these ticket charges. How can I get a break? What can I do, sir?
Well, if you want to visit the sleepy hamlet of St. Charles, come to my office. We're right next door to the St. Charles Historical Museum. 2 for 1 in one day. I'd be happy to host you even at the Historical Museum if you'd like. But if you would like to have a financial advisor who is not afraid of the word skew, implied volatility, and even the word row, feel free to contact me at any time at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
Whoa, I'm even afraid of the word row, so call Uncle Mike. He's not scared. He ain't afraid of no row. That could be there you go, another slogan for you. I got endless slogans for Uncle Mike. My marketing invoice will be in the mail. Hit him up, m2saw@rcmfs.com, or head on over to Option Pit. Check out what they got. Speaking of what we got lots of great shows for you. Head on over to Options Insider, theoptionsinsider.com, as well as, of course, at Options on Twitter and StockTwits and all the other big outlets. If you haven't already, you're listening to this live, so you probably have. But if you haven't already, you listen after the fact. Grab that Mixlr link so when we go live throughout the week with the interviews, fun stuff, as well as the big shows Thursday and Friday as well. You'll get those. You can tune in live. You don't have to wait for the podcast. So check that out. And we'll see you, of course, on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.